We have the second highest daily close in history for Bitcoin, which means a new all-time high occurring in Q4 is almost guaranteed. The price is now less than 4% away from an all-time high, and everything that we've been building upon in the previous videos, the analysis leading up to this point, has put us in this position for the next stage of the cycle, which I'm thinking is the final stage of the Bitcoin bull market. Now, there's still time to go, but things are going to get a little trickier, a little crazier, as I'll explain in today's video. So make sure you subscribe to the channel so you don't miss out on any of the daily content. I'm covering Bitcoin, cryptos, the stock markets, real estate cycle, and commodities, including precious metals. Rain, hail, or shine, provided I can still speak like I can at the moment. A little under the weather, but let's dive in. So Bitcoin closed yesterday, $120,600, making it the second highest in history. That takes us past the two key levels that we talked about in the two prior videos, but this time confirming it for 2 days in a row. We're going for day 3. And we get that third day, that just really increases the probabilities that this is going to be a genuine breakout. We've seen in the past that prices, if they're not able to do 3 days, at least 3 days, then the move, whether it's up or down, they usually fake out. So to the upside, you can see here, we had on the 12th, it was 120,113. You had another day up, highest close in history, 123,300, and then it reversed. So there was barely 2 days at those prices closing above that previous high, the first all-time high that came in on the 14th, and it wasn't a sustained move. The same thing occurs to the downside. So if we were to see a breakdown, you can see, for example, here on a short-term time frame, June, basically a close here at 101, the day snapped back the following day, and so you didn't have a prolonged down period there. Even when the price did come back down, you didn't see a long time underneath that low because it attempted again on one daily close and then snapped back again. So that's why we cover 3 days. 2 days is okay, but from back testing and from historical research on Bitcoin, on the stock markets, on stocks, basically on anything that has a chart, if you can get your hands on a chart and data, if you can get that 3 daily closes above a key resistance points, if you can identify those key turning points, then you're going to have a much higher probability trade. Now we're at 2 days, and both of those days have been above what I'm calling the J Powell tops, which we can all but clear out now. So 118,000 were the two tops. Basically a double top, a breakout of a double top is another really strong signal. And should it have been a triple top, double top, triple top breakout, very bullish signal. Same thing happens in reverse too. If you saw a double bottom and the market was going to break down from that double bottom, that is a very, very bearish signal. So it's not like the market wants to come back and test it and then rise back up. No, if it falls underneath it, closes underneath it, that's bearish. And the same thing is happening to the upside. We've got the double top at the moment, 2 days. Should today snap right back, close underneath that level, that would be bearish. But at the moment, it hasn't done that. And secondly, it's closed above the $120,000 level for the first time since the all-time high. And as I said, the second highest daily close in history, basically just taking out that day prior to the all-time high. So this is very, very good signs. The other thing that's really good about this on the daily chart, or basically the entire structure here, the pattern for Bitcoin, is a break of this double top, a break of the extension of the 50%. That's what I've got here on the chart, looking at a price range to the upside. It's a weekly swing. So now we can preempt price targets for example, profit taking or for resistance levels to come in. As it's broken past 50% and 100%, the next level overhead is 150% of that range. So essentially looking at potential resistance or profit taking areas, that number's about $127,700. And if we keep taking it higher, you get to around the 130s. And I'll cover that as we get to the price targets again in the video. But for now, that's all looking pretty damn good, especially as it has also broken out of the 7-year resistance line. And should we get to December in this cycle above this line, this diagonal that you can see on the chart, that would take it out to 8 years. So it's very close. It's coming very close to an 8-year resistance level, which Bitcoin has now broken above. Ideally, we get that close this week, happening in just under 3 days' time. And if it were to close at this point, at a price here or higher, then we have the highest weekly close in history as well, which, if you've been following the channel, you know that that is another bullish signal in itself. So we've got the short-term bullishness, let's call it the medium term, looking at the weekly, and of course long terms mostly in the monthly. And the benefit or the upside, the positive news for the bulls at this stage, is that things are still relatively quote unquote quiet in the markets. Looking at Google Trends, I would have expected, being this close to a new all-time high, that the search volume for Bitcoin would be a little more than where it is now. This is just on the 90-day chart, or the 90-day analysis of Google Trend words, only sitting at 40. Crypto is also climbing. They're both climbing, which is a good thing. People are searching for it again, but it's not at the same extremes as it was at the all-time high for August, nor at the all-time high for July. If we take a look at 12 months here, it's also basically just flatlining still. And I think by the time we get the data next week, we'll be able to see this start to turn up. People will become more interested. There'll be more search volume coming through for Bitcoin and cryptos. We're seeing it with the exchange volume as well. So the 7-day moving average daily exchange volume, the money is still there. The money is still floating around on the exchanges, which is what we do want to see for a bull market. And that's basically been everything we've been discussing here on the channel for many, many months, and of course, months and weeks here leading up to this point. Good signs that although it was quiet, although the markets seemed like people had just disappeared, we had all the bears out the last few weeks saying that Bitcoin had, I'll get to this chart in a sec, Bitcoin had topped and it was going to come down. You just wait. People were looking for sub $90,000, so they're expecting closes below 90K. I mean, anything is possible, but just the amount of certainty that they thought they were going to get this sub $90,000 level was a little bit up there to expect that the top was in, so happening so close to the peak. I think we've got to turn around from that sentiment, and the further up we go, hitting these next targets to the upside, if we start to get more extreme bullishness where people are thinking this market can never go down, or they're expecting just minor pullbacks and it's not possible anymore because of whatever reasons come through, whether it's interest rates, whether it's governments buying more Bitcoin, whether it's treasury companies buying more Bitcoin, whatever the reason or the excuse is, the fundamental logical step as to why this can't go down, that's when I think it would be a good time to start exiting some of the position, but not necessarily all of it, because of course these markets can keep going pretty high. And if we are following our Elliott wave and coming into a peak of 3, there will still be a correction, mind you, into 4. That next 5th leg could also be quite significant as well. So we don't want to be exiting the entire position because you still want to be on the ride. But personally, I think it's important to at least take something off the table when we get into those crazy times. The good news is we haven't got to those crazy times. The exchange volume hasn't blown up yet. The search volume hasn't blown up yet. The liquidations have wiped out a lot of the longs in the last couple of weeks. We saw the biggest liquidations in history. Therefore, and now that the price is going up and we had those washouts, things are still looking like there is further room to run to the upside. This is all fantastic news for us. Now, looking at how much further this can run to the upside, because once we do start to take profits off the table, what the hell are you going to do with it? This is what we go into detail with our members TIA Premium. You can find a link to this in the video description. We discuss it in our own portfolios across real estate, Bitcoin, precious metals, stock markets. That's a link in the top of the video description if you find yourself in that position wanting to learn more about holding and maintaining a portfolio through cycles. Looking at this count, how much further to go for Bitcoin? Now, I've talked many times before about October probably being up, Q4 probably being up. It looks like we're in that now. Mind you, we're only 2 days into now start of the 3rd day of October, and things are looking pretty juicy, up 5% for October already. There are 14 Octobers going back to 2011, not 2010, but we'll go back to 2011. Out of those 14 times, 4 occasions were longer than 3 months going up from October. So essentially, the data that I'm looking at here is once we get to October, how many months up occur after the October period. So we've got the October, what happens next? Out of those times, 4 of them, they were longer than 3 months. 10 of them were less than 3 months. So that's 71% of the time there was October, and then after October, the market only went up 1 month or 2 months. And out of those 10 times, there are 3 occasions where October had a reversal after it. So that was 2018 and 2019. You can see that November went straight down, and 2022. Those three have something in common. 2 of them were bear markets, and 2019 ran off the back of a very strong bull, short-term bull that was like a 300% move from 4K to 13K, and then it pulled back. So out of those occasions, 2 of them were bear markets, and the other one was like a mid-cycle bear market before things took off. And then you've got 1, 2, 3, 4, 5 occasions of 1 month moves after October. So even this one here in 2011, huge move up for November, a dump, and then things carried on. These ones here, this ran into the top in 2013. 2014 was basically a reversal from the bear market into a run into November, and then things continued down. This one in 2015 was basically a breakout of the accumulation of 2015. So an area of the market that we have been tracking with our cycle analysis. So this is also covered right here. You can see 2015 and 2020, giving us a roadmap for what we believe in terms of our theory and the analysis that we use as to what happens next. So you had a move up into November, a top here, sideways, and then another move. This is one of the big ones, 7 months. October basically ran, I'm calling it right there, until you got a significant monthly reversal. Things kept going. 2 months, straight up. 2 months was the most recent one, and the last one to read here was 1 month. So the all-time high cycle top for 2021, there was October, ran up into November, and then things reversed. With that data in mind, what do we think happens next? I'm just giving you the data. You're welcome to do what you want with it. I hope that we get something like a 1 to 2 month at least from this point, giving us a top around November or December. October could still go up. Remember, these counts don't include October. So if you want to include it, just add an extra add an extra digit to each of these. So essentially that'd be 2, 7, 2, 2, 2, and so on. So out of the 10, we get at least 5 of them with a single month higher. So they're the ones, and 2 more of those had 2 months. So 7 out of those 10, 70% of those, which then brings the total down overall because you'd have to exclude the zeros there. So there is a better chance that we've got 1 to 2 months to the upside from this point, especially when we consider that the zeros happened in bear markets and mid-cycle bear markets. So I'm leaning to the 1 to 2 months. To get these more extreme numbers, the 6, the 7, and the 5, they have happened earlier in the cycle. You see this one here in October 2020, had 5 months up. It didn't happen towards the end. The 7 months happened earlier in the cycle. It wasn't in the final year of the cycle. So you had 7 months up, and then 2017 was the final year. And then 2012 was the 6 months, and then the final year of the bull market had the 1 month. So I think it's unrealistic, or according to the numbers here, is far less likely that we're going to have a 6 or 7 or a 5 month run up. It's far more likely that we're going to see sort of a 1 to 2, maybe something in the middle that we haven't seen before, like a 3 or a 4, but looking at the probabilities, more likely a 1 or a 2 month rather than a 5 to 7 month run from this point. Now, if we get to that with the 2 month or the 1 month, and things, as I said, start to go a little bit wild with the exchange volume taking out previous highs, surpassing 100, $125 billion, maybe even surpassing last cycle, going above $150 billion on the 7-day moving average. We see the search terms absolutely skyrocket as well, maybe get closer to the 5-year all-time highs for Bitcoin and for cryptos, and more of these market sentiment indicators coming together. then I would start to think that maybe that 1 to 2 months is all that we're given in this cycle. Speaking of which, that's part of the Q3 into Q4. We're expecting more green for Q4. That's part of what we've been covering. We had the consolidation through Q3, so there's your July, August, September, leading to a strong green. We've seen that before. There's consolidation last year. There's consolidation through 2021. Good move into November. Consolidation 2020, huge move all the way through into the first half of the following year. Consolidation here as well, consolidation, so on and so forth. We've seen the consolidation, therefore there is a higher chance that we're going to see a nice strong move into October and Q4. The predictive cycles, or our predictive cycles here on the TIA indicator suite, shows the breakout of that double top, and the 5 and the 10-year composite showing us a strong move for October into Q4. So it seems like we're just starting that journey now, but there are a few corrections along the way in the first half of October. So how does that look? Maybe we get a push up 122, 124. Maybe we take out the top 125 and then pull back to those tops, or somewhere between that sort of 118 to 122, and then start to grind and push higher again for that next stage. Now, the 18-year cycle is still in play. This is the US real estate and economic cycle. I think we're coming to a top here for the US real estate and economic cycle within the next 6 to 12 months. But this is not the 16-year for Bitcoin, the 16-year cycle that people sometimes reference. But this is still giving more credit and more money into the system for Bitcoin. Therefore, I think there's still further to go within this 18-year cycle. And this is the first 18-year cycle that Bitcoin has been a part of. The forecast I had at the beginning of the year, so 10 months ago, Bitcoin will hit at least 122. It's done that. We hit the 122 in July, and I think we've got a little further to go here with the two price targets above, the mid 130s and the mid 160s, based on many price clusters coming together. There's a lot of lines there, but the point of this is many of the price extensions are showing similar areas of price resistance to the upside in the price discovery. So price discovery is above the all-time high price. Then we have extensions of previous moves, and when you lay them on the chart, knowing which ones to use, they're coming together roughly around the mid 130s and mid 160s. So lots to look out for there. We'll keep watching this on the channel as well. We do have a 50% in play at the moment at around 121,200. So could be some short-term resistance at the moment. Otherwise, we would love to see this slice through the 50% and then head higher to that next target of the mid 130s. That would, of course, bring Bitcoin up, probably overtaking silver, as silver has begun to have a slight pullback here, same as gold, just a daily pullback though. That's the only thing it's done there. But I think we're going to start to hear more about this with Bitcoin, silvers, precious metals, how they've been doing so well against the biggest asset classes in the world. Therefore, I think we've still got more in terms of the narrative around these assets that people want to be investing in them, especially when you consider silver and gold and what's happening in the US and, of course, all the rest of our countries with our fiat currencies being devalued. I think that it seems like a natural place that the narrative and the media want to take it through to silver and gold. It seems like it's their time again to be in the the headlines. Gold, 3,900 for the first time 2 days ago, and another all-time high yesterday. Minor pullback at the moment. Now for cryptos and Ethereum, or altcoins, Ethereum of course, the total crypto market cap hits a second highest price in history, second only to that price that came in August, but could be the highest weekly close in history. Current price is at $4.07 trillion. The analysis, the theory that I've been presenting here with you guys is that we're in this very late stage, the final stage of this move up. The cycle's been going for over 3 years now. The low is November 22. Next month, we'll take it to 3 years up from that low. And I think we are going to get into this top buyer's distribution zone. Now, this could be a lot larger. We'll see when we get there. You know, we could be looking at 5 trillion, maybe above $5 trillion here for the total market caps, including everything, of course. But in this stage, I think we're going to hear a lot more about how crypto is the next big thing, or why it's going to be here, and why you have to keep your money in crypto. That's usually what happens around the highs. Why it would be ridiculous to take money out back into fiat, and why you need to keep it in crypto. We heard it in 2021, early 21 and late 2021. The main things that came up then, and I think the same narrative will, a very similar narrative will present itself now, is around those tops when we heard Ray Dalio talk a lot about cash is trash. And he has been saying that for many, many years, but it becomes louder at those points in the cycle. And that will, in my opinion, will become louder yet again, because that would confuse the masses. They won't know what to do with their portfolio. They'll leave it where it is. I went through a similar thing in my first cycle back in 2017. I didn't know what to do with the funds, and I round tripped it down, holding it in crypto, because the fear mongering at the time was that USDT and USDC were going to collapse. So you couldn't hold anything else, but they didn't collapse. And we've heard that fear mongering now for the last 10 years around those, 8 to 10 years. And at that point, yeah, I had to basically round trip it or put it into other things and essentially lose 60 to 80% of your value. So if we do hear that again, it's going to be very similar to last time, you know, history repeating, all that sort of thing. So if you want to learn more about where to put your funds and how to rotate assets through these parts of the cycle, then TIA Premium, check that out, link in the video description. So top buyer distribution, that is going to be a good place for altcoins and altcoins to go a little bit more nuts. I think it's happening here with the USDT dominance. This has continued to fall another day down below 4%, good chance we head towards 3.7%, and below 3.7, that is where things go bananas. That's my opinion, because there is a lot of open ground below 3.7. We could probably get to 3.2, maybe down to 2.6, 2.5, meaning that the stablecoin, in this case USDT, it's going to be flooding out into the crypto space. That's if we get below 3.7. Now, at the moment, it's been range bound between 4 and 4.7%. If it continues to be like this, then it's just going to be a rotation between probably stable coins and the majors like Bitcoin, ETH, Solana, which have been doing very, very well, because we can see that the rest of them, anything outside the top 10, it's hit and miss. You possibly will have one or two that are doing well. Maybe it's your altcoin, I don't know. But the fact of the matter is the charts are not showing that there's not much going on at the moment, with the others chart still grinding for the last 6 months. So you got to go back to April 2025, that's 6 months ago, and it's been between 7.5% and 8.5% this entire time. There was a little while where it fell even lower than that, therefore meaning that there is a lot of money leaving altcoins, because for one, it's just completely diluted with the amount of millions of coins there are now. Whereas back in 2017, we only had a few hundred to choose from back then. I think we ended up getting up to about 2,000 by the end of the cycle. But now it's into the millions. And you can see that the others has continued to be range bound here, while we've seen Bitcoin go up and ETH go up as well. This chart, if you're looking for an altcoin season, needs to at least break past 9%. You can see these highs here and the lows there. It says 8.9 essentially. But yeah, round number, looking for a break of 9%. And it really needs to get above all of this resistance between 9.6 and 10% for anything of substantial altcoin seasonness to happen. This is what an altcoin season looked like in 2021, going from a 6% dominance to 17% dominance. So 11% of all of the market cap of crypto went into the outside top 10. So whatever the numbers are outside of that. So not the top 10, it went into this market. That's a lot of money leaving the top 10, mostly Bitcoin, ETH, and stablecoins, and flooding into the altcoins to give you that altcoin season, that big boom, and then the second one. This cycle, we've barely seen anything. We saw 8% up to 13%. So we saw 5%. And most recently, we only saw 9%, to 12%. So we basically saw 3.5% of that money coming out. Everyone got super excited and then it crushed them again. So in the last couple of months, we've only seen 7% to 8.5%. So you've seen 1.5. You've seen half the amount from what happened last year in November, December. That's all that's happened now. So we really need to see that break out of the highs. Ethereum also just hanging in there, doing what it needs to do. Our view is that it's still got a little further to go after retesting this next level up here, 3.8%. We'll see what happens from there, whether it does come back down or grind out again. And Bitcoin dominance still looks like it wants to rally only a touch more. It has hit 59%, so maybe we head towards 60. All of this is going to be part of that altcoin season. If we start to see the ETH get into a longer term uptrend again, good for the alt season, Bitcoin dominance, head down below 56% is the target for an alt season. And XRP doing relatively okay here. So things aren't looking too bad. They're just still hanging out, holding on. Lower highs, slightly higher lows or equal lows here. It needs to get above $3.40 for any sort of substantial move to the upside. And same sort of deal for Solana. Actually, Solana's been doing much, much better. $232 now, breaking past 50%. And the top set around 250. So Sol in a slightly better position here than XRP. And for the traditional markets, they've hit new all-time highs yet again. I think this is still going to be good news for Bitcoin and the altcoins eventually when that risk-on appetite comes back. S&P 500, new all-time high prices. The NASDAQ, new all-time high prices. The Dow Jones, new daily closing prices, all-time high daily closing prices. And if you want to take a trip around the globe, basically everything has been going bananas. Australia nearly at 9,000 again, running up. Canada, new all-time highs over the last 2 days. And the top 50 in Europe skyrocketing. That was the old all-time high. The last 2 days, new all-time highs being led by the UK, by Germany, by France, by the Netherlands. Italy nearly at a new all-time high as well. Brazil doing very, very well. Hong Kong and China hitting fresh 4-year highs. It doesn't look like it's stopping yet. This is all part of the everything bubble that I've been discussing for years on the channel based on the 18-year real estate cycle. If you want to know more about that, stick around on the channel and I'll see you guys back here at the next video. Thanks again, like and subscribe. Have a fantastic weekend. Cheers. Peace out.